All right, welcome back. We were talking about how the Nifty had earlier come back into the green. Let's put the index up. We are 12 points higher on the Nifty. So just an incredible reaction. Who would have thought? I mean, at 9 o'clock, 10 o'clock in the morning before the budget, if you'd have told someone, well, this is what is coming and what the market reaction is going to be, I don't think anyone would have said, we're going to be in green by 2:30 or 3 o'clock or whatever. So it's just that kind of a market.
Prashant, I'm sure you remember when we first had the 10% capital gains tax, when it was introduced in this country, it was 2018. We saw the market reaction, the jitters, the mayhem, the hue and the cry and the fall in share prices, right? Cut to 2024, I think we're in an absolutely different market.
I mean, Chris...
Is this a day when capital gains tax has been increased? Is it really the day?
Looking at the market, you wouldn't know. I mean, you just cannot tell. Let's welcome Nilesh Shah as well, Managing Director and CEO at Envision Capital. Is with us. Nilesh, good to have you with us here. Just incredible, right? The reaction.
Absolutely. I think it's good. I think it's good that the market has been able to absorb the hike in capital gains tax and some of the other provisions which have come in. So I think it's a big positive. It just shows that there is liquidity waiting in the wings. Any dips are being used to kind of buy into. Today has been a day not necessarily like the way it was on the election day outcome, where there was a sharp cut and then again a strong pullback. Today's a bit of that, but not to that extent.
I mean, if this reaction stays, the government would be thinking, thoda kam kiya hai.
And even STD, the STD rates have been practically doubled.
But that's for F&O. Yeah. See, I think there was also a bit of expectations that there will be hikes. Be it STT or be it LTCG, I think there was some bit of expectation and there were some which are probably in some bit of denial as well. So I think, yes, there's been a knee-jerk reaction to this, but then it's finally, again, business as usual.
Okay, all right, Nilesh, let's talk about stock sectors now, because now we look ahead, right? It's all about earnings, as even Ramdeo said. What do you like? You know, the budget is digested. We get back to tracking earnings, global developments as well. The themes you liked, and will you alter your strategy?
So I think, Nigel, clearly, if I were to kind of look at the earnings season so far, tech essentially has been the place where there's been the maximum amount of surprise. And leave aside the top tier tech companies, but down below, the smaller tech companies have delivered far better numbers. So I think that continues to be a extremely interesting space, number one. Number two, if I were to kind of just look at the budget today, there are huge positives for MSME lending, in the sense huge amount of encouragement there for MSMEs, as well as the huge focus on urban housing. So that takes me to affordable housing finance companies, or NBFCs focused on lending to MSMEs and giving out business loans. That, I think, is again becoming a pocket which has been strong so far. I think it just becomes more stronger with this budget. All
right, Nilesh, what was your view on real estate, prior to this event? Because for those who are holding those legacy properties, it's come out of nowhere. One would compare it to maybe an indirect inheritance tax, because all of a sudden you've got a property that's gone up multiple times, and you were sitting easy, you're saying that I'll use the benefit of indexation. That's gone out of the window. So your view on real estate stocks?
So I think it doesn't have too much of implications for real estate stocks because they are dealing with new inventory and selling it to a fresh set of buyers who've got nothing to do with it.
Right.
If at all, it's actually a boost for them, because probably the guys who are selling may not want to sell real estate.
Okay.
Because now you are going to encounter a fresh set of taxes. Right. You don't have the indexation benefit. So if you sell, you probably might end up paying a higher rate of tax. So probably they might just kind of take a step back. Let me see, may not sell. So to that extent, it's quite possible that the secondary market in real estate may kind of dampen a bit.
And then the primary market. So
and the primary market essentially gets a new lease of life.
Interesting.
So maybe a day or two the market may take to absorb this, and it might look sentimentally negative for real estate stocks.
Interesting.
But I think post that, it might actually lead to a fresh wave of demand for them.
Interesting.
Nilesh, is there anything in the budget because of which you will increase your weightage on consumption? Disposable income has gone up. There is a thrust on job creation. So post the budget, would you look to buy more consumer-related stocks? And which ones?
The only consumer-related sector which benefits quite phenomenally with this is the jewelry space. Okay, so across the board with the cut in customs duty, gold prices have corrected. That should essentially bring back demand. Also with increasing disposable income, essentially you basically want to allocate more to areas like jewelry, which is slightly more aspirational. So I think that's one sector which stands out.
But that sector, or some companies there are also facing competitive headwinds. So how do the two offset each other? And would you buy today? Would you recommend buying a
So,
Titan
Rima,
today,
I
for
think
instance?
jewelry is also facing the same fate as IT or private banks, where the big boys are facing competitive intensity. Their growth rates are no longer in double digits. They're getting relegated to single digits. There's already ownership in that space. But the tier 2 names, be it banking, be it technology, or be it now jewelry or some of the other consumer spaces, they essentially are able to grow at a much faster pace, and therefore fresh allocations are getting into the tier 2 names versus the tier 1 names.
You know, I just want to highlight that broader markets are also very positive, and maybe we should just take a minute to highlight some of these large movers, right? I mean, jewelry, of course, we've been highlighting. Look at something like an Angel One, right? Again, what was the fear? Taxation and regulation, etc. All of that has sort of come to pass. Stocks up 5.5%. To be fair, you could kind of look at it that, well, it's out of the way now. Although not entirely, because on F&O, I think we'll still see something from the market regulator, SEBI, later, perhaps. But, you know, that one is a big volume-led gainer. Then TeamLease is up about 11.5. There is a lot of talk about sort of skilling and staffing, etc., incentives to companies to hire more in the formal sector. TeamLease is seeing a big 11.5% move. You know, you got a few other sort of large gainers. MapMy India is up about 9%. I'm not sure if there's anything there. Nilesh, is there something?
Yeah, so I think it's got to do with the digitization of the land records.
Digital public infrastructure and
that's
kind of mapping.
One is DP, and then there was a specific mention of digitization of the land records.
Okay.
So clearly that means more business for companies which are into geospatial technologies.
NCC is another one, right? That, you know, package for Andhra, etc. NCC is up 10%. Stocks at about 347. It'll come up on your screen. You track this one, this space, construction?
No, honestly don't track it. No.
You know, Nilesh, I just wanted, since we were talking about the jewelry stocks, I want to get, you know, that segment out of the way. We spoke about the stocks. But I also wanted to ask you about the financiers, the gold financiers. Since gold prices were moving up, one would have thought the indirect way of playing it was through the financiers. And things were looking pretty okay. You know, Muthoot trading at 2.2 times. I think Manappuram was around 1.2 times odd. Suddenly, out of nowhere, these gold prices could come down because of the cut in duties. And in reaction to that, those stocks are getting a hard clonk in today's session. Your view on it?
Yeah, that's a bit paradoxical, Nigel, because when gold prices go up, the opportunity for them increases. But when gold prices comes down, the risk for them increases,
right,
because they have challenges of collateral, whether they have enough margin.
Indeed.
Especially on a day like this where gold prices have kind of got shaved off. They could have higher levels of risk if they don't have enough security. So yes, I think that's a bit negative for them. But again, I think these are things which just take a day or two for adjustments, and after that it's again business as usual.
You know, let me ask you, what happens to the poster boys of the market? PSU, railway, defense, because I mean, there's no major increase in capex, but like Ramdev said, there's nothing materially negative also. So now this huge bogey that's been running for the last 1 year, what happens to this?
I think the fundamentals are still strong. The challenge is valuations. You know, many of them are now quoting as if they are like kind of those perma growth stocks, long-term technology creators types.
Yeah, disruptive, like changing the world with
and,
almost like AI, right?
Absolutely, you know. So it's hard to differentiate between railways and AI or railways and data centers.
At least that's how they trade.
That's right.
You know,
so I think that's where the valuation, I think the risk is valuations, but not the underlying fundamentals.
You know, we should put the railway stocks up. Just look at these names, if we can quickly pull them up. RVNL is down 5, IRFC is down 4, Ircon is down 8, Railtel is down 5. So yeah, that's the but a lot of other PSU names. Mazgaon Dock is down about 4%. So at least today, and mind you, this is, you know, these stocks do sort of go into a bit of a sell-off once in a while, but that usually lasts a day, 2 days. That's the history so far.
Counting day as well, right?
Counting day as well. So you know, the shipping companies, Mazgaon is down 4. I think Shipping Corporation, Garden Reach, they're all down between 4-5%. Shipping Corporation is down 6.5% as well. So.
Even defense names, BEL, for instance, is down over 3%. So the entire PSU cohort is under pressure across railways, defense, shipping, etc.
I think the PSE index would be the sort of biggest loser at this point in time, 1.25% lower on the CPSE index. Nilesh, any trades come to mind beyond today?
No, I think it still is going to be business as usual. I still believe that it's going to be the growth stocks which essentially kind of come back, because that's what market is going to be looking out for. I think there's fair bit of froth which is there in some of the PSUs or some of the cap goods side, where stocks are trading at astronomically high P multiples. I think they'll continue to witness pressure. There is kind of probably a bit of over ownership out there as well. So you're going to see money being taken off the table. You could see unwinding and money go back into the conventional growth space.
So just to complete that point on rotation, while cap goods come under some pressure, the FMCG trade, and the same thing happened, right? On counting day, it was all about the FMCG trade, but there was no follow through. Do you think this time it's going to be different? Because there are incentives that have been given, sweeteners that have been given to middle and the bottom of the pyramid.
Yeah, so probably they could stand out, but I still believe that there would be the space which is more likely to do better is going to be the discretionary space, the premiumization space. I think the aspirational space. I think that space will continue to do a lot better versus the conventional staples.
Okay, all right. Nilesh, request you to hold on to that thought. We have the